Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented as always by Tusk Media. I am Andrew Hall. Joining me as always, Ben Nye. Ben, beard's looking good, man.
Yeah, it's getting a little heavy. Like I got up this morning and it's like difficult to raise my head. Are you having the same problem?
Same thing, in anticipation for November, we're growing out these beards and mustaches, all that good stuff for November. You can check out our fundraising page. It's on our Twitter bio, twitter.com/TuskMediaLLC. But we knew we were going to do this. Yeah. So for the last couple of weeks at the gym, I've been doing that weird exercise where you get down on your knees and you get the rope on the cable cross and you do kind of a reverse sit-up to really strengthen my neck so that now it's, I'm used to doing that with weighted resistance. So now I feel like as long as this thing doesn't get over like 20, 25 pounds, it should be all right.
Yeah. Well, I mean, you're pushing that now. I mean, what are you at, like 15?
Super full. Gonna have to borrow some beard oils from somebody just to kind of condition it and make sure it looks right. But in all seriousness, check it out. We're raising awareness for men's health issues. Lots of good causes. If you check out our Twitter profile, which I think is like right here or over there, I don't know, I get turned around. But if you check that out, it's got the link right at the top. You can donate to Ben individually. You can donate to me individually, which would be a lot better. You can donate to anybody on the team or the team in general. If you just like what we're doing and just want to support men's health, you can do that. But let's just jump in. We're talking about Facebook. Facebook is stacked that we actually did an earnings preview on a couple days ago. Earlier this week it went up. So check out the YouTube archival action. Everything's right there. Also the audio podcast. But a stack that we felt like we were going to continue to see some growth for. We are holders of the stock, but we did wonder kind of about the outlook and how many levers they would continue to have to pull. So let's start off with the high points in terms of just the beat. It was a traditional earnings beat, so to speak. Good numbers came through. Staggering growth when you start to look at kind of these whole numbers on a year-over-year basis. Profit growth was up 166%. That's good. Revenue growth up 56%. So solid growth, but at the same time, anything else stand out just in terms of the numbers?
Yeah, monthly active users I thought was phenomenal. 1.79 billion users. I mean, when you step back and think about that, that's just an incredible number of people who are on the Facebook platform.
And what was the expectation there?
That was 1.76.
Okay,
so this is an acceleration in the number of users that they're getting onto their platform. So that's very impressive, and most of that's coming from Asia Pacific and the rest of the world. Europe and US and Canada are more mature than that. So just a very good quarter. I was somewhat surprised the stock was actually down at the current time, but I'm sure we're going to get into the reasons for that. Big picture though, seems like they continue to hit and do what they want to do, stick with the plan. And they expect to continue to do that.
Yeah, they did very well. Numbers were fantastic. Stock's down about 4.85% today. You combine that with a loss yesterday of 1.5%, almost 2%,
it's
1.8%.
been coming down a little bit all since it hit 133.
Yeah, so it's been kind of selling off a little bit. You combine that and you kind of have this negative trajectory over the last couple of days, and especially again pre-market when we walked over here, it was down about 4.5%. So not a lot of good news, and in terms of the stock action, and I think that's really because of what was discussed on the conference call, and more definitely an outlook reaction. And they definitely have some concerns about continued growth, which to some extent is kind of what the concern is for any growth-oriented company like Facebook. But they kind of opened up the doors a little bit and let us know a little bit about that. So what did they have to say?
Well, that's a funny thing. It's kind of the same thing they've been saying for the last few quarters. I know we had some comments about kind of being a little bit half pregnant on it before, but and I think that continues to be the case because we still are waiting to see what happens when this ad load decelerates. So going to some of their comments on the call, they're talking about how the ad impression growth is being driven primarily by mobile feed ads on Facebook and Instagram. They're talking about how ad load is expected to decelerate in mid-2017, which will be a drag on revenue. So they actually say, and I'll quote now, So I do think as we look into 2017, we do expect that as you get into mid-2017, ad load will be a less significant factor contributing. We'll continue to get benefits of being able to grow our revenue with advertiser demand and continuing to innovate there. Mm-hmm. But I do think that as we slow ad load growth, we're going to have a slowing in revenue as well.
And we got a request in one of our recent videos to bust out the chalk. So I'm going to bust out the chalk. We're going to talk about Facebook feeds. I think most people will probably be familiar with that. But if you're not, when we talk about ad load, what we're really talking about is if this is your screen, whether it's a mobile device or a computer or whatever it may be, we're talking about how many ads you see. So maybe this was a couple years ago on a given screen, you're seeing that amount or a given amount of space. Now you're seeing that, even growing to that. Maybe there's one over here. You get the idea. They're obviously not laid out quite like that. That's why I don't do content design. But what they're saying is if this was 3 years ago, and this is what we had 2 years ago, and this is what we have 1 year ago, and this is what we have now, they're not anticipating adding any more. So some of the growth that you got from going from that to that, and then adding those, that's going to decline. And so in some ways you almost kind of get the comps rolling over are going to become increasingly difficult to match because it's going to have to be a little bit more organic, so to speak, rather than the superficial addition of just, hey, there's more ads in front of you.
Right. And one of the reasons that people could cynically look at this, I think there's going to be a lot of Monday morning quarterback, well, the stock's down, so let's look for any sign of bad news. So one thing that people could point to is the deceleration in price per ad. Last quarter it grew at a 9% year-over-year pace. This quarter it grew at a 6% year-over-year pace. So what you're seeing is that because of that saturation, this is the story that people could construct. Because you're seeing that just the increase in the amount of real estate that's being taken up, you're seeing the value of that real estate decline.
Right.
So that's a factor. I also think that the increase in the number of ads on Instagram is a factor because Instagram, at least when I've used Instagram advertisement for my own personal another business that
he's not advertising himself.
Right. Instagram is a cheaper platform to advertise on. So to the extent that Instagram increases the share of Facebook revenue, you'll also see that price per ad come down. But that's more of a mixed thing than anything.
Yeah, and it kind of makes sense. I mean, we've used the illustration of advertising for Tusk Media or the podcast or things like that. If we're looking to pay for something, if we're looking to buy this square right here, and that's the only square of advertisement available on a given page, on a rate by rate basis, we're probably going to pay more for that than if we're getting split up here. But I think the case could also be said that maybe we're anticipating that hey, this might be worth less tomorrow when there's 6 ads on here instead of 5, and if we do kind of have reason to believe that that's going to start to level off. All of a sudden, advertisers and the purchasers of that space may actually see a more transparent market in terms of actually knowing more about how many eyes are going to go on there. Right. That might actually become more valuable.
Yeah.
So you could actually see, seems like that growth start to tick up a little bit more because you do see, okay, there is a limitation to how many ads are going to be loaded up there.
What is interesting to me, kind of following on to that point, is that as a function of, so when you're Facebook, you want the ad impressions to be as high as possible. So that's a function of ad load and also the number of users and the amount of time they spend on the website. So if you have any of those factors improving a lot, then that could offset the decrease in ad load. And what they're seeing is they are seeing a high level of engagement. I mean, we saw really nice improvement in monthly active users. That we are seeing pretty solid trends in the daily active user to monthly active user ratio. It's right about 66%, which is about where it's been. Yeah. And they also say that time spent, they don't quantify this metric, but they do say that time spent is doing pretty well also. So to the extent that they can continue to pull those levers, that could offset the deceleration in ad load growth. So good news on those fronts.
Yeah, so there's good news on those fronts, but I think the one sentence or read through that everybody's really just focusing on, not even a read through, I mean, it was a direct comment. It's just just kind of this, that growth will come down meaningfully for revenue. And I think that people are seeing that, and they're talking about growth rate.
Right.
So we talk about the deceleration.
Right. Second derivative.
Yeah, exactly. So they're still expecting growth, and that's the other good news. I think the very obvious good news is, well, you grew profit by 166%. I'm kind of okay with you sliding down a little bit. Yeah, I mean, you obviously would prefer it to ramp up, but it's not like, oh, we grew profit 3%. Right, it's coming down. So they've got a lot of room to fall, which I guess is some of the concern from the investor standpoint as they kind of look at that. Ben, anything else that stands out? I know we're going to talk a little bit about some spending in next year. You want to transition to that? Or?
Yeah, let's talk about that.
So that was the other point that I found really interesting because we've speculated a lot about this, but they came out and said that they thought 2017 would be a big year for investing, a big year for spending on their platform. Seems like a big year for potentially acquiring other technologies. Facebook's certainly not afraid of doing that. The other things that seem really ripe for just improvement are well established in growing platforms like Facebook Live, things like that. And they've already shown a willingness to pay for content creation, for talent, quote unquote, to be on there. What are some areas you think would be appropriate for Facebook to really explore, whether it's improving something already in existence or buying something or bringing something else kind of into their family?
I think they need to really explore improving Instagram and monetizing that, because I think they have a very good asset there. Mm-hmm. And I think that the ability to reduce the friction in the amount of, someone looks at an image and then buys. Mm-hmm. I think that could be incredibly useful. And it's also very useful to the advertiser who can actually see that metric. Oh, mm-hmm. Well, I'm getting X return on the investment, and I can very easily quantify that, right, because I'm getting this click and I'm getting paid right then. Mm-hmm. So I think that's important. I also would be interested to see how Facebook's investment kind of fits into Snapchat. And this is more of kind of a capital allocation from their point of view. Are they going to try to compete with Snapchat? Are they going to continue to roll out these new products? Mm-hmm. Or are they going to, just kind of cede that territory to Snapchat? The final piece that I'm guessing they're going to invest in more is this continued investment in Facebook Live. Mm-hmm. Video was a huge theme of the conference call. Yeah. Video ads, video content, and so I would expect some significant investment in there. So when you think about that, obviously the R&D going into that and actually building out those products, but even more than that, you have to be able to store this video. Mm-hmm. So they'll be building out these gigantic server farms mm-hmm. where they can store all this data.
Yeah, I think Facebook Live is the area that I'm most intrigued. I watch a decent number of, I guess, broadcasts comparable to this, but maybe slightly more professional, or maybe slightly less, I don't know. But certainly not as professional as yourself, but probably more professional than me.
I don't know, I'm not sure half on tech.
That's true, that's true. And I'm drinking coffee on TV. But I watch a lot of broadcasts that are almost podcast-style applications, but they put them on Facebook Live. You can watch them. A lot of them are sports, a lot of them are politics, things like that. The one thing that I see consistently that stands out is how many people will use that content, kind of like we do. They'll take a Facebook Live video, they'll attract a large audience, they'll rip the audio and make it a podcast. I think there's a lot of room for growth for that, and the most obvious place that I think they could generate revenue immediately is simply this. In all of those, you will get a live ad read. So imagine right now I pause and I plug Stamps.com or MeUndies or any of those people that advertise on just about every podcast. Imagine me doing that right now on Facebook Live. Well, guess what? Facebook doesn't make a penny from that.
Right.
I'm getting paid for that purely on the podcast side. So you have this kind of weird purgatory of I'm having to do it on video, and that audience isn't earning me any money immediately. Meanwhile, Facebook isn't making any money from the advertisement I just gave for free to users that are watching on Facebook. So you kind of have this middle ground where it seems like Facebook could pretty quickly come up with an ad placement service, whether it is live ad reads where, hey, they find out people, they learn about their audience, which they obviously would have all that information, and they partner you up with Stamps.com directly, or they actually build something out kind of like YouTube. On YouTube, we can go and we could find a sponsor for our videos, we could find live ad reads, or we could just go with generic kind of Google ad placement. Seems like Facebook could start to just place things kind of generically at the beginning of a Facebook Live broadcast, and if I click go, I watch a 15-second ad, which currently there's nothing like that on Facebook Live. Then I jump in, and I'm on a 15-second delay so that I don't miss any of the content of the live broadcast. Seems like that would be a really thing to kind of flesh out and work out, and it seems like they've been willing to spend money on attracting partners Seems like if they're willing to do that, maybe they're willing to really get feedback from them, which I do think is a strength of Facebook, is actually listening to their content creators. If they continue to do that, it seems like they might actually find kind of a next level way to kind of integrate that whole package where, hey, we're providing you the ad reads. We're going to get all the revenue, or a portion of the revenue, off of the Facebook Live stuff. Whatever you do with the audio thereafter is up to you. You can call Stamps.com and figure that out, or you can cut that ad out and put something else in. Because that's the easy part about audio is you can put whatever you want there. It's real easy to edit. So I think that's an area where they could get a really quick return on capital. Because you watch some of these things. I was watching this atrocious site, Barstool Sports, does a lot of content that's, I don't know, irreverent humor about sports. And I was watching, they had a Facebook Live broadcast of 3 guys watching the World Series last night. And it went on for like 3.5, 4 hours. And there was one guy that everybody was tuning in to watch because he's a big Chicago Cubs fan. There's 14,000 people watching steadily. So maybe not the same 14,000 people, but a lot of them. And Facebook didn't make a dime off that, right? In terms of directly, because not only that, you're not seeing any ads. It comes up full screen. Meanwhile, the whole time they're doing ad reads for Bacardi and whoever else while the advertisement's going on. So it seems like Facebook's got to find a way to monetize that a little bit more effectively. I think that'd be a really good investment.
Yeah, I agree.
In terms of the stock, you holding it, you selling it,
so for a little context, we just in the office we had a bit of an internal bet, but basically we had a range, and the midpoint of the range was 120. So I'd actually be inclined to raise that midpoint a little bit. I actually think that this quarter was not nearly as bad as the market's making it out to be. I was thinking that we might even see some more deceleration in users. As far as Facebook goes, I think that users are still the primary determinant of the stock. Mm-hmm. So I would move that range up slightly, maybe to a midpoint in the 125-ish. Mm-hmm. So that's where I would do, and then you can kind of, I'm not going to give you the upside and downside to it. You guys can figure that out. But I'd have kind of a midpoint. So below 125 would be reasonably attractive. Above, I get less and less excited about it.
There you go. So yeah, we do on Facebook for clients. I don't think we're going to do any panic selling today. I also don't think we'll be really adding a whole lot. I think we're pretty appropriately allocated to the stock. That's all we got. Hit subscribe. If you're on iTunes, we're there. Audio podcast, search Tusk Media. We're right there. If you're on YouTube, hit subscribe. That helps us out a lot. And if you're on Seeking Alpha, leave us some comments. Make fun of how we're dressed, whatever it may be. We'll talk to you guys soon. Have a great weekend.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.